FlashFunders is excited to launch our equity crowdfunding educational series, starting with today's webinar, The Future of Crowdfunding, Everyone's an Investor. Today's presentation will also conclude with an open Q&A session. With that, I'd like to introduce today's featured panelist, CEO and co-founder of FlashFunders, Vincent Bradley.
Awesome, thanks, Robbie. I'm going to try to share my screen, guys. You can see me throughout the presentation. Let me get that running. Awesome. Okay, awesome. Got that up and running, guys, now. So today, guys, we're going to talk about the future of the private capital markets and specifically equity crowdfunding. The big takeaways today that I hope everyone walks away with is, one, if you're an entrepreneur, what you can do to get ready for Reg CF, the implications, what you can do to prepare, and then secondly, if you're an investor, the rules around how you're going to be able to participate. So what your investor limits are going to be, how much you're going to be able to invest, what types of companies you're going to be able to invest, what types of shares you're going to get. We're going to talk a little bit about that. So let's get started. Let's jump in. See if I can make this thing work. Okay, so you kind of know who I am, but my name is Vincent Bradley. I'm the CEO and co-founder at FlashFunders. My Twitter handle is Vincent M. Bradley, so if you want to follow me and get kind of up-to-date quotes on what's going on in Reg CF and what's going on in the private capital markets, I try to tweet every piece of interesting information that I come across. A couple quick things on my background. I'm a serial entrepreneur. I went to the University of Michigan. I've traveled all over the world. I worked overseas in North Africa and the Middle East. I've now come back and decided that I really wanted to help entrepreneurs, really wanted to get in the trenches with them. And the fundraising process, the way in which they access capital is so time-consuming and so expensive that at FlashFunders, myself and my team, which is world-class, is here to help entrepreneurs connect with a much larger audience of people that can participate in these deals. So let's jump right in. The agenda for today is we're going to talk about the Jobs Act. I hope everyone knows what the Jobs Act is, but if you don't, it's Jumpstart Our Business Startup Act. Talk a little bit more about that and the impact it's making. We're going to talk about Reg CF specifically. That's why everyone's here. That's why I'm presenting today. We're going to talk about the fact that 230 million Americans are now going to be able to participate in private companies. Pretty cool. Pretty cool. I'm pretty excited about that. And then lastly, we're going to talk about the impact and why this all matters. Lastly, after we talk about the impact, we're going to talk about FlashFunders, what we're doing, who you can reach out to at FlashFunders to learn more about this industry and potentially put up an offering. Okay, so let's start with an overview of the Jobs Act. Jumpstart Our Business Startups Act, pretty catchy. The Jobs Act was signed into action by Obama in April of 2012. As you can see, before anything went into effect, we had about a year. So Title II of the Jobs Act was the first big thing to, let's step back. So the Jobs Act was a bill that Congress put together to help private companies access capital more efficiently. It was broken up into four big sections: Title I, Title II, Title III, and Title IV. So whenever you hear Title I, Title II, Title III, that's what they're talking about. They're talking about the Jobs Act. Title I affects IPOs. We're not going to talk about that at all. General solicitation, Title II, was signed into effect, actually implemented by the SEC in September 23rd, 2013. That allowed private companies to publicly advertise, generally solicit. Title IV was the next thing that came into effect. Last June, Title IV Reg A Plus was released by the SEC. That allows private companies to now raise from unaccredited and accredited. So that was kind of the first step with crowdfunding. The thing about Reg A Plus is it's very expensive. You have to file fees with the government. You have to file forms with the government. You have to do financial audits. The cost is really going to be upwards of $100,000. So it's not very applicable not very feasible for early stage businesses. Reg A Plus is for that company that maybe they intend to IPO in 12 to 18 months. It gets them about 50%, 70% of the way there. They build a larger audience, and then in the future, they actually do a proper IPO. That's why Reg A Plus has been nicknamed the mini IPO. The exciting news, and again, while we're all here today, January 29th, 2016, last Friday, Reg CF rules were set. Title III. This is equity crowdfunding as the Jobs Act intended it to be. Reg CF doesn't launch till May, but Reg CF is going to now allow 230 million Americans to participate in these early stage private company investment opportunities. From the side of this startup, it's a much more cost-effective solution for mass fundraising. So instead of spending 100 grand, 200 grand on doing a Reg A Plus offering, entrepreneurs are now going to be able to spend in the hundreds of dollars to hopefully less than thousands of dollars on mass market, unaccredited and accredited general solicitation offerings. So let's jump in to Reg CF. So regulation crowdfunding. As we talked about, the rules were set by the SEC last Friday, January 29th. Doesn't go into effect until May, so we have about 4 months to get ready. I'll talk a little later about what you can do to prepare for Reg CF, but let's first identify what Reg CF is. So this is going to allow a company to publicly fundraise up to $1 million in a 12-month period. Everyone's going to be able to participate. 230 million Americans are going to be able to invest in these startup opportunities. It is a low-cost mass market funding option, meaning that it's not going to cost tens of thousands of dollars or, like Reg A Plus, hundreds of thousands of dollars for a company to offer these securities. There are going to be limits on the investment amounts. We're going to go through that. Little bit of complexity to that, but we made it very simple to understand. And then lastly, you are going to have to do an SEC filing and provide a financial review, but it's nowhere close to a GAAP standard financial audit that can cost 25 to 50 grand. It's much simpler than that. So let's jump in a little bit further now and talk a little bit more about what's going on in the Reg CF space. So the company audit requirements. There's 3 buckets that you're going to be able to raise capital up to. So there's 3 limits, and this is from a company startup standpoint. So you can raise in the 100K bucket, 100K or less, and if you're going to raise 100K or less, the audit requirement for that is that the chief executive or principal executive of the company, CFO, COO, CEO, is going to have to review the financials of the company and say these are good. That's pretty simple. Most startups are going to have pretty simple financials, not going to be overly complex. They're going to be able to review the financials and then say these are good, and it's just a self-certification. The next step up is raising between 100K and 500K. For these people, they're going to have to actually work with a third-party public accountant, so independent of the issuer. Raising between 100K and 500K, you're going to have to go out, you're going to have to get an accountant, they're going to have to review your financials. There's some costs associated with that. If you work with a platform like FlashFunders, we're going to have some preferred partners with some locked-in, low-cost solutions for this, so it's not going to cost the company, tens of thousands of dollars. It's pretty low cost. Again, if you're an early-stage business, getting solid financials should not be that difficult. You probably don't have a lot of overhead. You probably don't have huge revenues at this point. You just got to make sure that you put your financials together in the proper formats, and that's something that we're going to help with. And then the third bucket is if companies are raising between 500K and $1 million, you're going to need an audited financial by a public accountant. So this is definitely the most onerous. Here's the thing: if you're raising Reg CF, if you're doing a Reg CF offering for the first time, then you don't need an audited financial. In that scenario, you just have to have a review, so it's very similar then to the 100K to 500K bucket. For everyone that's doing a Reg CF offering in 2016, you can pretty much ignore the audited financial because I suspect no one's going to be doing their second offering in their second Reg CF offering in 2016. So just ignore that for now, but come 2017, come 2018, you got to be aware that if you're doing your second or third or any subsequent offering with Reg CF, you want an official, And the thinking with the SEC is we want to make sure that customers aren't being frauded. If companies are coming back, if entrepreneurs are coming back and doing multiple Reg CF offerings, we want to make sure that they're doing things the right way. So there's going to be a little bit more process oversight for repeat offerings. I think that makes sense. One thing, guys, I want to point out that I forgot to at the beginning is if you have questions, write them down. There's a box, navigation bar on the right side of your panel. Over here, you should see it. And write down the questions, and I'll come back at the end, and we'll go through them. If the questions aren't answered, I'll provide contact at the end that you can reach out to people at FlashFunders, and we'll get back to you probably by the end of today and answer any questions that you might have. Okay, let's keep rolling. So next thing that you got to worry about, SEC filings and advertising requirements. So if you're an entrepreneur and you want to do a Reg CF offering, you're going to have to file a Form C. And Form C is going to be basic information about the company, information on its ownership structure, on the executives. It's going to include your financial review. And once you send that into the SEC, they're going to review it. They're going to approve it. They might ask for more information. Once they've approved it, there's going to be a 21-day cooling off period. After that cooling off period, you can launch your offering and go live. Once you're live, they've outlined the types of information that they're comfortable with the company sharing. So let's go through these three things really quickly. You can find a lot of this on the SEC website. If you work with a platform like FlashFunders, we're going to make sure that you conduct an offering in a compliant manner. That's one of the important pieces of our business, is making sure companies follow the rules and they stay out of trouble. So let's go through these advertising notices. What companies are going to be able to share? A statement that the issuer is conducting an offering. So you can basically say, hey, I'm doing an offering. You can talk about the platform you're working with, the name of the intermediary through which the offering is being conducted. So, hey, I'm company A, I'm raising capital on FlashFunders, and you can link to that platform. You can link to your offering. You can share the terms of the offering. So you can talk about the amount of the securities being offered, the nature of the securities. Are you doing a convertible note? Are you doing a price round? What's the price of the securities? I'm selling shares for $5 a share. I'm selling shares for 89 cents a share. You can talk about that. Then you can talk about the offering period, the closing date. Basically, this is a no-brainer. You can talk about the facts of the offering. And then the third one is a little bit more gray area, but factual information about the legal entity of the business, location of the issuer, limited the name of the issuer, the security, the address, phone number, website, the issuer. One of the things I don't have on here is you can talk about what your company is doing, but you need to make factual statements about the company, like we do this. You can't make statements of fraud. You can't over-embellish things. The SEC wants to protect investors. That's something that FlashFunders, the platform, is going to have to enforce. We're going to have to make sure companies follow the rules. The SEC is going to be overseeing this as well. But let's keep moving. We can come back. We can talk more about this if you have questions. Let's keep moving. So investor limits. And this is a little bit confusing. I jumble my brain sometimes. So that's why we got this nice chart on the right that we put together, which actually breaks down how much you're going to be able to invest, how much each investor is going to be able to invest based on their income or net worth. So for starters, the way they've outlined the investor limits is the lesser of annual income or net worth. And then we have two buckets. So the lesser of annual income or net worth for 100K or less is the greater of 2,000 or 5%. So let's come over to our chart, and you'll see the first two lines. We have an income of 30 grand. We have a net worth of 100 grand, 105 grand. We have an income of 150, and we have a net worth of 80. Because it's the lesser, they both qualify for the 100K or less. So 150 income, 80 net worth, we're going to go with the net worth. The net worth is what we're going to base our limits off of. So that 80K, 5% of 80K is going to be 4 grand. So it's the greater of 2,000 or 5%. That's why you get the 4,000 investor limit. If we look at the top line, we have 30 grand income, 105 net worth. So we're going to go with the lesser of the two, which is going to be a 30 grand income. Well, 5% grand is under 2,000. It's $1,500. Well, it's the greater of 2,000 or 5%. So you're going to be able to invest $2,000 in that scenario. You make 30 grand, you're going to be able to invest $2,000. When we're looking at the 100K or more, it's going to be 10% of annual income or net worth, not to exceed 100K per investor. And again, we're going to base this off the lesser. So if your annual income is 150, your net worth is 100, we're going to go with the smaller amount. It's going to be 100K. You're going to be able to invest 10%, $10,000. It is going to be capped, however, at 100K. So if your income is 1.2 million, your net worth is 2 million, you're not going to be able to invest 10% of 1.2 million. You're going to be capped at 100,000. You're not going to be able to invest 120,000. So a couple things to know. One, I guess one isn't the thumb, one is the pointer finger. One, self-certification is accepted. So you're not going to have to provide income statements or net worth statements. You're just going to be able to self-certify. The second important thing to know is a platform like FlashFunders is going to do this for you. We're going to make it super easy. We're going to have a couple of fields, you fill in your information, and we're going to tell you exactly what you can invest at that given time. The last thing I want to add that I don't have on this slide is that these limits are 12-month limits. So it's not per investment, it's over a 12-month span. You can invest $2,000 over a 12-month span, $100,000 over a 12-month span, depending on what bucket you fall in. You cannot invest $2,000 per deal. So that's one very important thing. Again, when you come to FlashFunders, when Reg CF is live, once we're approved by FINRA, which we're currently not, we're going through the process, but once we are, you're going to be able to do this very streamlined, very easy. We're going to take the brain damage out of it. Okay, so let's keep going. This is a little bit complex. Use that chart. We're going to send out this deck afterwards. This chart will tell you what you'll be able to invest. So platform requirements. This is really, really, really important. I hope all of you come to FlashFunders and want to work with us, but if you don't, I want to make sure that you work with a platform that is doing things the right way. Every platform that does Reg CF is going to have to be a FINRA registered funding portal. That process is happening right now. You're going to have to be a FINRA funding portal. So make sure you work with platforms that are registered with FINRA. You'll probably find that down in the footer. There's going to be disclosures throughout the site. When you're doing your homework, make sure you do that. And then secondly, I highlighted a piece of functionality that the SEC is going to require on every offering, a public forum to allow for commentary on an offering page. So there's going to have to be a public forum, public Q&A, where people can write comments in your offering page. SEC is going to require this. You want to make sure that when you're picking a platform, they follow the rules. If they're FINRA registered, they're going to have all the functionality. It's all going to be correct. FINRA is going to have gone through it. So you don't necessarily need to worry about stuff like, oh, is there a public forum? Focus on the fact that there's a registered founding portal by FINRA, and they'll have the right functionality because they won't get through the approval process without it. But this is just an example of the type of functionality that the SEC is looking for. Let's keep going. So what can you do to prepare for Reg CF offering? Well, I'm just a strong believer in validating your business. So launch an MVP, go launch a successful Kickstarter and Indiegogo campaign, build your customer base. It's a great way to get momentum going in the right direction. The second point, prepare great content, so video, marketing images. You want things that are going to resonate with the crowd. I think that goes very nicely with the first one, launch a successful Kickstarter and Indiegogo campaign. If you go pre-sell your goods, you're going to validate what you're doing. You're probably going to have created great video content, marketing images. And then the third point, build your base. Who are you going to market to? Who are you going to raise capital from? I think, again, this goes very nicely with the first 3 points. raising capital via Reg CF is very powerful. Your community becomes your investors, becomes your evangelist. If you have a base that you can go to very efficiently, that you've already built on Kickstarter and Indiegogo, your chances of success and efficiency in which you're going to achieve success are going to be much higher. So just food for thought. And the last thing, get your legal in order. So this isn't Kickstarter and Indiegogo. You're not pre-selling your goods. Now whether you're an LLC or a C Corp matters. We recommend that you're a C Corp. I'm not going to go into that because that's a whole nother conversation, but there's tax reasons, there's future investment reasons, there's creating multiple classes of stock reasons. We recommend you're a C Corp. We can talk about that offline. Have a clean cap table. Know who owns your company. If you've given out warrants, if you've given out options, have all that documented. Have your ownership structure documented. Have those documents on hand. Be organized. And the last thing, corporate governance. Make sure it's set up. Board meetings, minutes, all of that good stuff. C Corp, clean cap table, corporate governance. You should probably have a corporate securities lawyer that you work with that helps keep all of this stuff clean as your company grows. Let's keep going, guys. Got a couple more minutes, and then we're going to jump into a Q&A. I just want to get through a couple more slides. Want to be very clear where the industry sits. So rewards crowdfunding, Kickstarter, Indiegogo, everyone can participate. There's no regulatory oversight. They're just selling a prototype of the product or a beta. Equity funding is what FlashFunders has been providing for the last year and a half. We've been helping companies raise capital from only accredited investors. The regulatory is Reg D, private placements. We're regulated by the SEC and FINRA. We're selling ownership. The last bucket on this chart is equity crowdfunding. Everyone can participate in equity crowdfunding. The regulation is going to be Reg CF against SEC and FINRA, and securities are being sold. It's very, very, very different than Kickstarter and Indiegogo, where they're selling a prototype. We are now dealing with stock. So the regulatory is very important. This is a great chart. Let's keep moving though. You can come back to this. So why does this all matter? Well, I'm going to look at this from the angle of an investor. This matters because companies are staying private for longer than ever before. We now have over 120 companies that are valued at over $1 billion. And the scary thing about this is that because companies are staying private for longer than ever before, there's really less and less value to be captured once they go public. Most of the value creation is happening while the companies are private. And so this is a great chart, and really within the tech sector. So this is an awesome chart. This is an Andreessen Horowitz chart from a presentation they gave recently. You used to be able, as an unaccredited investor, to invest in companies like Apple and Microsoft and Oracle and Amazon after they went public and still get a big piece of the upside. As an investor today, in the 21st century, it is incredibly difficult to be a part of any value creation within a company after they go public. And so what that means is that let's jump to the next slide before I make this point. What that means is that 220 million Americans, so 220 out of the 230 million adults in this country, have been unable to invest in private companies, if we go back, that are creating value. So they're just, it's shocking. In my opinion, it's unacceptable. Everyone should have access to innovative companies that they believe in. They believe in the product. They believe in the people. So that's just a big thing that I'm very passionate about from the investor standpoint. So let's just briefly talk about what we're doing at FlashFunders, and then we're going to jump into a Q&A. So FlashFunders is the best Reg CF platform for entrepreneurs. The disclaimer here is that we are not approved by FINRA yet. We put in our application. We're working through the process. It's probably going to be a couple months. We may have to do some stuff when they come back and give us feedback. But we intend to be a Reg CF FINRA registered platform, and the tools we have and the regulatory structure that we've set up, we think is second to none. And if you do your homework, you'll very quickly realize that people can't compete with us on doing things the right way. We put a lot of money and a lot of time into cutting zero corners. We want to do things the right way at FlashFunders. So what we're going to provide companies is complete fundraising management. You're going to be able to come online. You're going to be able to have all your compliance, regulatory, legal taken care of. We will provide docs, or you can use your own. You have investor CRM on our platform, so you can see who's invested. You can see where traffic is coming in from, analytics. We provide all of that. You're going to have access to our growing network of investors. We have thousands of investors right now. Hopefully it will be in the tens of thousands very soon, where we've just crossed the 12,000 mark, so we're going for the tens of thousands. These are accredited that will also be able to participate in your offering. Shareholder services. So I don't want to give away everything we're doing, but we're going to have a really awesome setup for managing the crowd investors that I think is going to make Reg CF viable. I don't think most of our competitors are going to be able to provide the solution, just because the regulatory component of it is very complex. We're doing the hard work behind the scenes so you can have a very simple, streamlined solution. And the last thing is just end-to-end regulatory compliance, doing things the right way. I just want to keep stressing that. We want to do the difficult stuff, the legal, the compliance, the regulatory, and let you focus on building your business. And so this is how we view regulation as a strategic advantage at FlashFunders. For me, this is a little complex. So if you don't come from the finance world, if you don't know about all the different setups, don't worry about it. I've tried to make it pretty simple how our regulation affects the entrepreneur and the investor in a meaningful way. So as a 250K net capital broker dealer, which we're currently becoming one, so we're not there yet, but we're very soon to be. That license allows us to help companies fundraise via Reg D, via Reg CF, many different ways. Secondly, in-house escrow solution to reduce costs. As a 250K, we will have partnered with prominent banks to offer very low-cost, easy banking solutions. As an exempt reporting advisor, we work with a bunch of venture capital funds that are sitting on our platform, investing in companies on our platform. As a transfer agent, we're going to be able to offer a nominee share structure. So when the crowd does invest in your shares, you're only going to be adding one person to your cap table. FlashFunders Shareholder Services. You don't have to worry about adding 5,000 people. We're going to take care of that for you. And then lastly, as a registered funding portal, we're going to be able to do all of this under our technology. So this is a pretty interesting chart. We have 4 unique regulatory verticals that we've built over the last 2 years. This is very difficult. This is our secret sauce. So I want to do questions now. I'm going to go to the question thing. If you have any questions, please write them down. If I don't answer your questions now, I'm going to provide contact information at the end to FlashFunders team members. You can reach out to me directly as well. I'll give my email at the end, and we can try to get your questions answered pretty quickly. So let me pull up the questions. Give me a second. Okay, awesome. Awesome. So here's a good one. This is from David Giorgenti, and I apologize if I butcher your name. David Giorgenti. He said, what was the minimum investment? $100, what he asked. And ultimately, that's going to be up to the company. We'd like the minimum for Reg CF to be about $100. We think that makes sense. When you go under $100, the cost of just transacting becomes a little onerous. So we like the idea of $100. That's going to be up to the company, but we're going to push them towards $100. There's another question here that says, keep the banks out of the equation. So that's from Scott Northcutt. Scott, what we're going to do there is, as a 250K net capital broker dealer, we're able to now custody funds. So there's very few 250K net capital broker dealers in the United States, less than 150. Think about like Charles Schwab, Fidelity, when you can have you have money on those platforms. We're going to partner with a bank like Wells Fargo or another prominent bank, and it's going to be very similar to like a client trust account at a law firm. We're going to be able to custody funds and offer escrow solutions to companies that's incredibly low cost. Basically, it's going to cost the company nothing. It's going to cost us a couple $100s a month. We're not going to pass that cost along to the company. It's going to be a very efficient, streamlined banking solution. Investors are going to be able to come on and invest directly in these companies very, very, very easily. ACH, hopefully PayPal, credit card. We're working on a bunch of different solutions right now. Here's another one from Gianni Sigli. Again, apologize if I butcher your name. What if I'm an accredited investor and don't want to be limited to Reg CF's 100K per year investment limit? So great question. One of the really cool things that we're going to provide, and I don't want to give away too much, but you're going to be able, if you're a company, you're going to be able to raise more than $1 million in FlashFunders. So you can only do $1 million through Reg CF, but you can come to FlashFunders and we're going to be able to stack. So Reg CF, Reg D, traditional private placement. And you'll be able to publicly advertise that, hey, I'm raising capital. Anyone that wants to invest that's unaccredited is going to come in through the Reg CF. Anyone that wants to invest that's accredited is going to be able to come in through the Reg D and invest as much as they want, so no cap. And by stacking the regulation, we think we're going to be able to offer a much, much better solution to companies who they need to be able to fundraise outside of the restrictions of just $1 million. They need to be able to raise capital from accredited and unaccredited investors. We understand that. We want to give them a really solid solution. Let's hit a question from Catherine Elise Evans. What do you do if you don't understand financial aspects, yet have creating something everyone will benefit from? So that's what we're here for. If you have a really awesome consumer product, don't worry about not understanding the finance and the financial stuff of building a company. You're going to have to probably go out and partner with the CFO at some point, but when you're pretty young, we can help provide some template financials which you can fill in pretty easily, and then we'll work with you to make sure you can get through the review process and push those forward to the SEC and get through that process pretty efficiently. I wouldn't be too concerned with that. Richard Branson, who's a multi-billionaire who many people know, he didn't learn how to read a balance sheet until just a couple years ago. He's actually admitted that. So obviously there's more important things than financials. Understanding your customer and connecting with your customer is what business is all about, as I'm glad you know. One last question, guys, from Dave Brook. He said, is the investor's income self-declared? And when it comes to Reg CF, yes. It's all going to be self-declared, self-certification. So you're not going to have to provide documents proving anything. It's what the SEC is looking for is for people to make good judgments. If they don't want to make good judgments, then there's going to be a safe harbor. So people are going to be able to invest more theoretically. If they don't, my job at FlashFunders, our job at FlashFunders is to encourage people to do things the right way, help companies follow the rules, but it is going to be self-certification. I'm going to do one last question, and then we're going to move on to the, I'm going to provide information on who you can contact at FlashFunders. This question's from Abby Gallego. Do you only help U.S. companies or startups? So Abby, right now, we only work with U.S. entities. Preferably, we'd like you to be a Delaware C Corp or a California C Corp, but if you're not, that's okay. Reach out to us. We'll figure something out. If you're an overseas entity and you really want to work with us, reach out to us. We'll figure something out. There are ways to work with you. And then startups. So startup is like a very loaded word. It's a huge word. We are focused. Our focus is early stage startups. So companies raising under $5 million. With that said, we are helping some companies do larger fundraisings than that. They're using our technology in the background. Talk to us if you think you're a little bit bigger and you'd still like to take advantage of some of the tools we have. We can make your process much more efficient, much lower cost. So our goal is to eventually work with later stage, but right now we're focused on startups. So I got to move because they're yelling at me right now in the background saying that you're taking too much time. I definitely want to get everyone's questions answered though. If you want to learn more about FlashFunders, you can reach out to Robbie. Robbie's our Director of Investor Relations. It's Robbie at FlashFunders. If you're a startup, reach out to Dylan Fadden, Dylan at FlashFunders. You can also visit www.flashfunders.com. You can check out our site. There's touch points on the site. And then lastly, you can send an email to me, Vincent at flashfunders.com, and we'll try to get your questions answered as soon as possible. I just want to thank everyone for joining today. We're very, very, very passionate about helping entrepreneurs raise capital and helping investors to crowd 230 million Americans access private companies. Everyone should be able to invest in the products and the people they believe in. And so the new laws coming out, Reg CF, they're big. We have a massive change underway right now within the securities industry. And FlashFunders is positioning itself to really help entrepreneurs and investors. We do things the right way. We'd love to work with you. Look forward to having people connect with us. And again, thanks for being a part of our webinar today. Everyone have a great weekend, and we're going to do more of these in the future. So if you just want to provide feedback on how we can improve, what you'd like to see in our future webinars, also email us. Okay, awesome. I'm going to let everyone go. Thanks for being a part of this today. Cheers.